Go live?
Yeah.
Yeah. No, it'll sit there and do that until you get pissed off. And then what I do is I hit the back button, and all of a sudden you can see it's been streaming for 2 minutes.
Yeah, so it's on, right? We have a similar problem.
Oh, why don't you tell me this? I've been pissed off for like the last 3 hours.
So we open this. You can see that you should be already streaming now. It should already be streaming. You just refresh, reload this. You should be already streaming. No?
It is. If you hit the back button, it'll see now. It's,
Yeah.
Yeah.
So that means I think it's okay. Yeah.
But even though it's this. Because if
It should disappear.
That's what I was just discussing with him.
No, yesterday, right?
Huh?
This is yesterday.
Probably, yeah.
Yeah, February 12th. I know you're live. I think it's.
Would that won't affect the image or the video or anything? Because that's what he said. He goes, it's streaming, but he couldn't see the picture. I think is what he just said.
Searches. You're live. You can just check this by using anything. You're live.
And the picture's okay?
Yeah, it's okay. Just
we don't know why it's doing that. It's just.
Yeah, I don't know.
It just started today. Or was it?
Well, I have one account do that from time to time, but for after a while, this should be normal.
Okay.
Yeah.
Okay.
Yeah.
Okay, so here we are, the greatest channel on earth for U.S. markets, U.S. headlines, and we're going to get into some fun stuff. We have markets, we have headlines, we have news updates. We're also going to get into later on some of the charts, the patterns, the fundamentals, and things like that. We'll get into cash flows, earnings, reports, things like that as well. Also some chart patterns here. Yeah, and so right now let's go ahead and start with some of the news. For example, Apple stock has worst day since April as iPhone maker faces FTC scrutiny and their delay on Siri. Apple posted its worst day on the market since April 2025. Yeah. Apple just wrapped up its worst day in the market after reports surfaced about delays with Siri, and the company's new app faced regulatory scrutiny. The stock dropped 5% on Thursday, wiping out its gain for the year and leaving it down almost 4% in 2026. The long-awaited artificial intelligence update to the iPhone maker's Siri personal assistant has been internally pushed back to May and potentially later, Bloomberg reported on Wednesday. The update was expected to launch within a couple of weeks, but the company may roll the features out slowly over several months, the report stated. Yeah, the Federal Trade Commission, FTC, told Apple to review the terms of service and curation policies on Apple News. Yes. And Ferguson cited recent reports that Apple News was promoting left-leaning news outlets while suppressing conservative content. Last month, Apple Wall Street expectations when it reported first quarter earnings. However, the stock has been dragging down in part by Wall Street's recent concerns that big tech companies are spending too much on AI. On Tuesday, UBS downgraded U.S. tech sector to neutral, citing software uncertainty and heavy capital expenditure. Yes, that followed a sell-off in software stocks over the past weeks as investors turned cautious toward the sector. Yeah. So, bearing this in mind, let's go ahead and take a look here at Apple's stock right now. What's going on with Apple? Boom, boom, boom. Dun, dun, dun. Yeah. So Apple is launching a major AI project for iOS 27 and aiming to upgrade Siri to chatbot interface and develop new data center chips for improved AI. That's a little update on Apple. Let's go here. Dun, dun, dun. Yes, for those of you just joining this fantastic channel, let me give you some of the breakdown here. This is the let me type this in. For example, we are going to do some chart patterns up here, and this is going to. We're also going to check out the MACD and how to read it. We're also going to do the RSI, which is the relative strength index, and we're going to talk about how to read it. So let me give you some insights here. Dun, dun, dun. There's 70, here's the 30. What does this mean? Well, text 70 and above equals overbought, and then also here 30 and below equals oversold right there. And then, for example, it can go way over past 70 before it gets before it gets market corrected, and it can come way down here, way past 30 before it ever market corrects and goes back up. So it can go both ways. Now, all that being said, let's take a look at this. Here, when you look at the MACD, you want to look at the MACD is the blue line crossing the red line, basically. So crossing going up means price movement up, and then crossing going down equals price movement down, just like that. Okay, now let's take a look here. Dun, dun, dun. Having said all that, let's look here at right here. So right here, the RSI is sitting here, right here at 55, right? 55 is very neutral. We haven't talked about that. We should. Let me give you a yeah, 55 down here to about right in here. This is the this is what we call neutral or consolidating or continuation, stuff like that, because it's basically between when the RSI is between, basically what is this, about 55 down to about 45, in that range right there. That's kind of the continuing part, the consolidating part. Now let's keep that going here. Let's go right here. For example, right here, you see how this just stays in between 59 and 40 right there. It's the same right here. You see how this stays pretty much the same right there. That's consolidating, okay? Um, right there. That's consolidating, and that's that box right there. So that's how that kind of goes together like that. Yeah. Now, let's look over here. Let's look at some chart patterns. This is a pretty easy one to see right here. This is a reverse head, and here you have the left side and the right side, and you can kind of see right here, this right here, that's the kind of the diagonal neckline, but it doesn't really break out much. So this is what we call a reverse head and shoulders, but no no breakout. No breakout really. But let me highlight that for you right here. Right there. Now let's go over here. Dun, dun, dun. Oh, yeah, here's a good one. For example, right here, you can see, basically this is what we might call a triple top. Right here, yeah, double top, triple top. And then right here, oh, wait, let me undo that. Right there. And then here basically is the neckline, and it breaks out and goes down right there. So there's the breakout and goes down. You can see right here, it equals all these parts right here. Yeah, and that's the, if I can, for example, also here, you basically have, see right here how it comes up twice. It's kind of the same thing. You have a double top there, right there, and then it breaks out a little bit and goes down. All right. Let me see if I can get you some more of these fun ones. Let's see. Oh, yeah. Here's another one. You have basically what's called a head, a left side, a right side, and then here this is the breakout, and yeah, you can see it goes down right there. Yeah, so there's that right there. So head and shoulders, and there's the breakout right there. And dun. Yeah, so those are some chart patterns for you, just to get you started right there. So let me type these out for you so it'd be easier to understand. Here's the double and triple top. So it'll break out and go down, break out down, and the same thing here. You have your basically you have a double top, breakout down, and here you have a head and shoulders, and it breaks out down. It breaks out down right there. And then let me give you another one here. Do we have any more? Yeah. So this no breakout, and yeah. So again, so those are some chart patterns, and then also we have the consolidation, and that's that right there. And remember, 70 and above is overbought, and 30 and below is oversold. And let's see. Let's take a look at some of the fundamentals here. Okay. So volume-wise, Apple is trading at 81 million. Market cap is at 3.8 trillion. Let's go here to earnings. Earnings-wise, quarterly, the last 3 quarters are are surpassing expectations. I mean, Q1 of 2026, Q4, and Q3 of 2025 all surpassed expectations, and we're looking right here annually, 2025, 2024, and 2023 all surpassed earnings expectations. Now, why are we looking at earnings? Because earnings can be a sign the company is healthy, it's making money, things are going okay, and therefore it lets you know if it's healthy or not. But that's not the only factor that you should look at, but it's just one of them. Let's look at the statements wise. Statements wise, click the annual button. Going here to the last 3 years. Let's look at the last 3 years for revenue, gross profit, and operating income. All 3 years were in the green except for 2023. 2023 all the way down was in the red, but if you look at 2024 and 2025, both those years were in the green for all those sectors. Now, what about net income? Net income was only good during 2025. 2023 and 2024 were in the red. Yeah. Now, let's look at the. For example, those are some interesting things about Apple. So it looks like it's a strong, healthy company for those parameters. If you want for entertainment, we can look at the forecast. So let's look at the forecast here. Forecast, 39 analysts offering a 1-year price forecast. Have a max estimate of 350 and a minimum estimate of 205. So bear that in mind. If we go back here to the charts, yeah. So that's Apple. That's the reason why we looked at them is because they're in the news right now. And let's go to another one. This is an interesting one. Tech IPO hype gets drowned out on Wall Street by a prospect of $1 trillion in debt sales. Yes. A couple of the highlights of this article talk about the SpaceX IPO and some of the the debt issuance across the globe for AI, and also the chatter around the boom in tech IPOs. Meanwhile, has yet to result in any notable listings this year. Yeah. The current action, while the prospect of SpaceX initial public offering and the hopeful listings from OpenAI and Anthropic have juiced IPO excitement on Wall Street, the current action in tech capital markets has nothing to do with equity, but rather it's all about debt. Techs for hyperscalers, Alphabet, Amazon, Meta, and Microsoft are collectively projected to shell out almost $700 billion this year on capital expenditures and finance leases to fuel their artificial intelligence build-outs, responding to what they call historic levels of demand for computing resources, which is kind of true. And to finance those investments, industry giants may have to dip into some of the cash they've built up in recent years, but they're also looking to raise mounds of debt, adding to concerns about an AI bubble and fears about a market contagion if cash burning startups like OpenAI and Anthropic hit a growth wall and pull back on their infrastructure spending. Now, in a report just late last month, it was estimated that after tech and AI related debt issuance across the globe more than doubled to $710 billion last year. That number could soar to $990 billion in 2026. Now, Morgan Stanley foresees a $1.5 trillion financing gap. Let me repeat that: $1.5 trillion financing gap for the AI build-out that will likely be filled in large part by credit, as companies can no longer self-fund their capital expenditures. Chris White, CEO of Data and Research, has experienced a monumental increase in size, amounting to massive supply now in debt markets. The biggest corporate debt sales this year from Oracle and Alphabet. Now, Oracle said in early February that it planned to raise $45 billion to $50 billion this year to build additional AI capacity. It quickly sold $25 billion. It sold $25 billion of dollars worth of debt in the high grade market. Alphabet followed this week, upping the size of the bond offering to over 30 billion after holding a prior $25 billion debt sale in November. Yeah. So Amazon filed a mixed registration last week, disclosing that it may seek to raise a combination of debt and equity on Meta's earnings call. And Tesla bolsters its infrastructure. The electric vehicle maker may look to outside funding, whether it's through more debt or other means. Yes, so bearing all that in mind, with some of the world's most valuable companies adding to their debt loads by tens of billions, Wall Street firms are plenty busy as they await movement on the IPO front. This as focus what Elon Musk will do with SpaceX after he merged the rocket maker with AI startup XAI last week, forming a company he says is worth 1.25 trillion. That's trillion with a T. Reports have suggested that SpaceX might go public in mid-2026. And also, Goldman Sachs analysts said in a recent note that they expect 120 IPOs this year, raising 160 billion, up from 61 deals last year. Gosh, that's almost doubling the number of IPOs. So bearing all that in mind, let's take a look here at some of these companies. We've got we talked about Amazon, we talked about Meta. Let's do that. So here's sorry, my internet's a little bit slow right now, but there it is. All right. Amazon, Meta. One second. My internet's a little bit slow here, as you can see. Oh, here we go. So let's look at Amazon right here. Sorry, my internet is so slow, but let's see what we can do here. Oh. Here's Amazon. All right. Yes. Oh, here's a little update from TradingView. Italian police searched Amazon Milan's headquarters in a tax evasion probe. They are investigating if Amazon had an undisclosed base in Italy from 2019 to 2024, requiring extra taxes. Got it. So here's a little bit about Amazon. Remember, we talked about this being hold on, I can't. There we go. My internet's a little bit slow right here. So that's the RSI, that's the 70, this is the 30. And then, remember we talked about this. For example, over here, when the price chart goes down, you'll also see the MACD cross right there and go down. See here, it's actually pretty well on time. See, here's the price chart, here's the MACD right there. So that's that. And then let me go over here to show you a couple other things. Basically, right now, if you look at the RSI is sitting here right here at about 72, 73. Hold on. Why won't that? Well, anyway. So, here, let me, yeah. So here, right here, the RSI, Amazon, right here. You can tell I'm doing this live, right? It's okay. Amazon, let me get rid of this. So Amazon, right here, the RSI is sitting there at 72. It's overbought right there, and you can see right, looking at the MACD right here, you see that line, the MACD, because of the price chart here went down. You can see the blue line right here crosses pretty well on time with this price chart right there. And right here, basically, you see a. This is a good one. It's basically a double top, but for example, the double top doesn't actually change. It doesn't actually break out. Double top is supposed to go down, but doesn't break out. So, wait, this is actually, here's, sorry, I read that wrong. Here's your bottom, here's your bottom, and here's another bottom. So basically this is, basically you're looking at a triple bottom right there. So I made a mistake, sorry, the triple bottom right there, goes up like that. So you're looking, let me type that for you. You have the double or the triple bottom, and then the upward breakout, and then, for example, right here, what can we do here? What do we see here? Yeah, right in about, let's see, let's go over here, see if we can give you some better chart patterns. Oh, right here, here's a good one. So for example, right here, you see this chart pattern, here's the double top right there, and then here, this is what we call the neckline of the double top, and as you can see right in here, right there, and it breaks out and goes down just a little bit, right there, yeah. So, let me close that. Let's get you some more chart patterns over here. Again, we're looking at Amazon because it's in the news right now. Let me give you this one right here. And then basically right here you have right here you have what we basically call a double bottom, and right here, let's see, you can see it a little bit right here. This is the neckline, but it doesn't break out much. It bottoms out, but here there's not much of a breakout, just a little one. And then so right over here, what else? Okay, so those are some patterns for you. That's Amazon. Yeah, and I'm looking at the 1 day. Yeah, this is the 1 day. You can spread this out, and also see if I can get you any more. Yeah. Yeah. So that's that. All right, looking now at Amazon, what are their volume wise is at 83.9, market cap is at 2.1 trillion. Earnings wise, Q4, Q3, Q2. So all the quarters did well. They surpassed our expectations except for Q4 of 2025. It just missed it. Now click on the annual button and let's see the annual earnings for the last 3 years. See 2025 overall annually surpassed expectations. Same thing with 2024 and 2023 also. So that part's looking healthy. Even though there might be a couple quarters that didn't do well, overall annually it looks good. So bear that in mind. And then let's go here to statements. Statements wise, annually, the last 3 years, if you look at revenue, profit, operating income, right there, all 3 years were all in the green, all looking good. And if you go down here to net income, all 3 years, all in the green, all looking good. Even 2023 had a net income of 30.43 billion. So again, the fundamentals for earnings and statements are looking good for Amazon. And then if you go down here to forecast. Again, I just do this for fun, mainly because the all-knowing experts on Wall Street, who are these people? 63 analysts offering a 1-year price forecast have a max estimate of 360 and a minimum estimate of 175. So, taking that for what it's worth, bear that in mind. When they give it a strong rating, and that's Amazon. And we were looking at that because it's one of the companies talked about here. Another company that we can talk about. We could do Meta or Oracle, for example. Let's do Oracle right now. Yeah, Give me 1 second. My internet's a little bit slow here. Sorry about this. Give me 1 second here. My internet is just catching up. Oh. Wow, it's a little bit slow today. Sorry about this. Give me just a moment here. Okay, here we go. Markets, stocks. Sorry about the delay again, but let's go here. Okay, and we were going to look at, Oracle. Let's do this. Oracle, Oracle has won a contract enabling mission owners to use its cloud services with Department of Defense Security, including AI database for secure data integration in AI workflows. For those of you who are unfamiliar with Oracle, Oracle engages in the provision of products and services that address aspects of corporate information technology environments, including applications and infrastructure technologies. It operates through the following business segments: cloud and licensed hardware services. The cloud and license segments market sells and delivers enterprise applications. So that's Oracle, basically in a nutshell. But let's take a look here at the, let's first start off with the RSI here, okay? Remember the RSI, RSI right here, 70 is overbought, down here 30 is oversold. And as you see here, it can go way below 30. In this case, it goes down to 20 before market corrects and goes up. And oh, what just happened? What the heck? Sorry, ladies and gentlemen, I'm not sure what just happened. Yes. Give me 1 second as the internet comes back on. All right, here we go. All right, done. So, okay, as you can see here, yeah, one thing I want you to point out here is the MACD. Here, the MACD, as it crosses going down, that confirms that price chart movement there. And right now the RSI here is sitting here at about 33. So 33 isn't oversold yet, but it's getting there. And as you can see, the chart just keeps dropping like that. So that's like the RSI, the relative strength index, is showing you that it's very easy, very possible for this chart to keep dropping, because it's got the sellers have momentum. Yeah. Now let's take a look here. For example, just to show you again, this right here, that you can see the MACD crosses going down. That means the price chart's going to go down, and right there, it also crosses going down. A couple of chart patterns I can show you here. For example, right here, there's the bottom, and then right here, this is basically the neckline of the here's the neckline of the double bottom right there, and then here rectangle, so that's the double bottom, and then it doesn't break out much, but it does break out a little bit. Right here you see a little bit of a breakout right there, and then also basically here is a let me give you another one right here. Dun. Yeah, for example, right here, this is another, if you look right here, this is basically a double bottom right here. It doesn't have the same double bottom, and then here is the double bottom with a neckline, and then this double bottom with a neckline, and it breaks out right here. Yeah. So, and looking here, we have so this, let me type this for you. For example, this is these two are right here. Double bottom, and then double bottom right there, and then here we had a double top. There's the double top right there. So you see that, and then right here, this is basically what we call the neckline for the double top, and then you see the breakout right there. And with the double, let me put this in a box for you here. Double top, breakout, type that for you, double top, neckline, and then the breakout right there. Yeah, and then for example, if you look at it the other way, oh yeah, here for example, here's another, you have the right here, you have the double top, and then right there, you have here's the top, and then here's the neckline breakout, and you see it does break out a little bit before before then you have another another double bottom right there, double bottom to reverse it. So let me highlight that for you. Yeah, those are some chart patterns to look at. So basically what you have is a double top, and then a double bottom right there. If I can type it right, right there, double top and a double bottom right there. So that's looking at that. Now let's go back over here. Dun, dun, dun. Yeah, so we're wondering what it's going to do right here, right? Well, again, what's going to happen next? That's looking at the RSI, and look here at the, here's an interesting part, the MACD, although it's lagging, just keep an eye on that because it's already, the MACD I think is going up towards the signal line because of this right here, and it's lagging. So in this part, the downward trend hasn't even registered yet on the MACD. So again, that's one of the bad things about the MACD is it's oftentimes lagging, so keep that in mind. And then let's look here at some of the fundamentals. Volume is at 23.29 million. Market cap is at 449 billion. If you look here at earnings-wise, Q2 of 2025, Q1. Okay, if you're looking at quarterly of 2025, Q1 just missed it. Q2 surpassed earnings by a lot. Q4 of 2024 actually beat earnings by a lot. But let's look at this annually. For earnings, 2024 surpassed expectations. 2023 just missed expectations. 2022 beat expectations actually. And if we go here to statements wise, click the annual button. If you look at the last 3 years, 2022, 2023, and 2024, all 3 years, revenue, profit, operating income, last 3 years were all in the green, all doing well, except for operating income for 2022. Otherwise, everything was in the green, looking good, looking strong for Oracle. And then scroll down to net income for 2020. All 3 years, 2022 through 2024, all 3 years were good for net income. And then for just grins, if you want to look at the forecast-wise, 36 analysts offering a 1-year price forecast have a max estimate of 400 on Oracle and a minimum estimate of 155. So again, I don't put much stock into that, but take it for what it's worth, okay? And that's Oracle. Let me give another one here. Let's go to stocks. And here. Let's take a look at this one. We did Oracle. Now let's do Oracle, Amazon. Yeah, let's take a look at Meta. Meta is a good one. Let's do Meta. So Meta here, Meta stocks surged, as you can see right here. It surged after its earnings report, contrasting with Microsoft's 10% drop, highlighting successful options strategies amid this earnings season. Yeah, let's go volume-wise. Let's take a look at that. But yeah, so Meta's surging, even though Microsoft is plunging. So yeah, that was Thursday. Yeah, boom, it's surging right now. Let's look at their RSI. What's their RSI doing? Right here, RSI 45, 46, 47. Yeah, it's very, very neutral right now. You can see how it's stabilized. So that's the RSI showing. But look at this. I want you to see this right here. It plunged all the way down. The RSI broke all the way down to right there, to 24 before actually market correcting. And then, yeah, so you can see, and the MACD followed suit. You see right here, actually the MACD on this one was delayed. See right here, the MACD right there crosses the orange signal line, but it crosses it in a delayed way. Here, it also, for example, it starts going down here, and the MACD crosses right here. So you see the MACD is delayed. That's one of the big problems with the MACD, but just be aware of that. Now let's do this. Let's go with a couple, yeah, let's look at some of these patterns here, chart patterns. Oh, one thing I'll show you is this really quickly. This just jumps out at me. Right here between 56 and basically 42. right there, 56 and 42, bum, bum, bum. Right there, 56 and 42, it's consolidating, and right there, 56 and 42. Yeah, so that's a consolidation. Like for example, you see it goes up and then goes down basically the same amount. And you see that in the RSI as well. This is basically what you can call some consolidation or continuation patterns right there. And yeah, consolidation right here. And then here's what I want to show you. Right here, you can see right here, there's this right here. Bang, it's a double bottom. And then the double bottom, you can see the neckline is actually bang right there. So you can see the double bottom with neckline. Yeah, double bottom with neckline, and with the double bottom, you can see it does go up. For example, double bottom, and then it has a reverses to go up right there. Reverses to go up. And let me show you another one. If you go right here. So basically, here you have 1, 2, 3. All you know, basically it's a triple bottom, but it doesn't actually break out. So keep that in mind. Let me show you this. Oh, here's a. Oh wait, hold on. Let me grab this one. Yeah, let me show you this one. Right here, you have the reverse head, and then you have the left side and the right side right there, and then here is the neckline. Basically, it's kind of a diagonal neckline right there. So this is what we call a reverse head and shoulder with diagonal neckline, right? So reverse head and shoulder, diagonal neckline. And as a reverse head and shoulder, it's supposed to break out and go up, which it does right there. So it goes past the, and it breaks out past the neckline. Right here. And we go here. Oh, why does it do that? Okay. Also, here's basically you see right here we have two bottoms right there, and then this right here is your kind of a diagonal neckline right there. It doesn't break out much, just a little bit right there. Yeah. So basically that's a double bottom with a small neckline breakout right there. Okay, so bum bum bum. Also, here's one that you can also look at right here. Same thing again. Right here, here's your reverse head. Here's your left side, and then over here is your right side. So this one also basically is a diagonal neckline right there. You have a reverse head and shoulders with a diagonal neckline, and yeah, has a nice breakout right there past the diagonal neckline right there. Yeah. Bum, bum, bum. Yeah. So those are just some of the chart analysis that I can show you quickly. Let's go back here to the beginning. And yeah, so what's Meta doing right now? Let's take a look. So Meta, volume-wise, are at 14.96 million. Market cap is at 1.64 trillion. And then looking here at earnings quarterly. If you look at Q4 of 2025, they surpassed expectations. Q3 and Q2. Q2 also surpassed expectations. Q3 missed it by a lot. Q4 blew by a lot. So basically for the Q3 is the only one that missed it. Look at annually. Annually is usually more important. So let's look at it annually. 2025 blew past expectations. So did 2024. So did 2023. So again, fundamentally, the strength of Meta as far as their earnings goes is looking good. Also, if you look here on statements wise, annually, revenue, gross profit, income, all the last 3 years are looking good in the green for those. And net income, the last 3 years are looking good for net income, except for 2025 that missed the mark. So, but those are the fundamentals for Meta. Again, if you want to look right here at forecast wise, 60 analysts over a 1 year price forecast, max estimate of 1,144 and a minimum of 700. Back to the chart here. Yeah, so there's that. One more thing that we can take a look at here. Let's go back to Oracle, Meta. We did that. Alphabet. We did Alphabet. Let's take a look here. For example, Applied Metals jumps as AI demand drives chip making tool orders. So for example, let's look here at Applied Materials jumps. Applied Materials jumped 11.7% in the pre-market trading on Friday as investors bet that surging AI demand and a tightening memory market will continue to drive orders for the company's chip-making tools after it forecast second quarter revenue and profit above Wall Street estimates. The largest U.S. semiconductor equipment maker is positioned to capitalize on robust AI chip demand, which is consuming global memory supplies and driving chip makers to expand capacity. Analysts say could support multi-year growth. So bearing that in mind, the Santa Clara, California-based company projected second quarter revenue of about $765 billion, plus or minus $500 million, above the analyst's average estimate of $7.01 billion. It forecasted adjusted profit of $2.64 per share, compared with estimates of $2.28. The surge comes as AI data center expansion from hyperscalers and rising demand for high bandwidth memory are tightening chip supply chains, driving fresh spending on wafer fabrication and packaging equipment. In December, industry group Semi forecast sales of equipment used to make computer chip wafers will rise about 9% to 126 billion in 2026, and a further 7.3% to 135 billion in 2027. Yes, so bearing that in mind, Applied Materials forecast lifted other chip equipment stocks. Published shares of ASML, the world's biggest supplier of chip equipment, and Lam Research climbed 2%. Applied Materials shares are up 28% year to date, outperforming the Philadelphia Semiconductors Index 14% gain. Yeah, so let's take a look at that. Applied Materials, AMT. For example, let's do this. Trading view. Applied Materials. Applied Materials right here, as you can see. Applied Materials reported Q1 revenue of 7.01 billion, a 2% decline, but income rose to 2.02 billion. Revenues forecast between 7.15 billion and 8.15 billion. Yes, so here we are. This is Thursday. Yeah, just jumped up right there. Bang. As you can see here, the RSI sitting here at the RSI is sitting here at 38, and yeah, so that's why it's kind of stabilizing right now.